2024. What's going to happen in this market? I've been watching a ton of videos on everybody making their predictions as to what they think is going to happen. Honestly, no one really knows. But if you are looking to buy or sell in this market, I'm in the Belleville and surrounding areas, then you are going to ask the question and want to base your decision on what you think might happen. So today we're going to look at some stats from the previous month of December, the final month of 2023. And then I'm going to provide a little bit of an outlook of what I think might be happening in 2024. Let's get to it. But first, if you don't know, my name is Jeremy Tremblay. I'm a realtor here in the Belleville surrounding areas. If you have any questions about potentially buying or selling, or just want to know what's going on with this market, feel free to give me a call. My information down below. I've got my phone number, my email. I would love to chat. Let's get to it. As I mentioned, we're going to start by looking at some of the stats from the final month of 2023. The first one here we're going to look at is months of inventory. So this one I always find quite interesting because ultimately what this means is if you had all the housing available right now that's for sale and no new listings came on the market, at the current rate that people are buying, how long would it take before we ran out of houses? And as you can see here, looking back to July, so mid-year, we had 4 months of inventory. It went down to 3.5. Then it started going up. You had 4, almost 5 months. And then you start seeing it drop November at 4. Well, the big one here, we're just over 2 months of inventory. And this is for Belleville and Quinte West. These are where we're looking at. And that's a little bit surprising, to be honest. Not many people expected that. And we'll go into a little bit further next why this is happening, but it's just one of those signs that we can look at as to what is going on. And this really means that people are starting to buy up the inventory that's available. Now, average sale price, always something that we look at. Here's a full year in a review. We started off the year a touch over 500,000 on the average price. And then as you went through the year into the summer months, it kind of went up a bit, leveled off, and then stayed fairly level, just over 500,000, had a slight increase in the final month in December. So not a wild swing for the last number of months, but it'll be curious to watch and see if that trend that we saw October, November, and December of it going up, will that continue? Number of sales. So this here, if you look at this 1 year in review, this is very common for what happens during the full year. It has cycles. So in Canada, we've got our winter and we've got our summer. Our seasonal changes are quite drastic. And as you can see here, December of 22, the number of sales, very low. And then it started to rise right into May when it kind of really peaked. And then it started dropping again as we went towards the end of the year. Historically, this is quite normal that we have fewer sales because less people are getting out there and wanting to buy when it's freezing outside. But it'll be curious to see once again the turnover into next year if we'll replicate what we're seeing on this chart. Now, days on market is another one that if you're looking specifically when you're buying or you're selling, this is something that really affects you because every day that goes by that you see a house, you start to wonder. It plays with your emotions a little bit. And with this here, you can see going back to the first month of last year, we were around 35 days on the market. So a house would sell within, on average, 35 days. We went in towards May, which, as we can just saw on the previous slide, May was when we had the highest number of sales. Well, it's also when they were selling the quickest. So 20 days on the market. Then that started to rise as you go along throughout the year. November, we hit our peak and we got towards 45 days on the market. And then this month, we've dropped back down to just above 40 days. And so it's from what you're seeing on these so far, we ended the year on a fairly balanced market. Houses weren't flying off the market. You had time to buy them. Now, I touched on that first point of months of inventory and that drop right there. Well, what that is showing is that of all the houses that are actually available, more people came in and started buying in December. which means less houses were going to be available on the market. I think what's affecting that more than anything is the total number of listings. Inventory. That's what we need to see. So we just looked over the stats for the area. We kind of have a good picture of what happened last year. Now, what are some of the predictions going forward? Well, let's base it on a little bit of knowledge here. Interest rates. You're going to hear about that a lot. The news, the Bank of Canada, they are going to be looking at changing that interest rate. And the reason they're doing that is to control the inflation. They're trying to control inflation, bring it down to the 2% range. How that affects housing, and specifically those looking for a mortgage, is as that interest rate goes down, then you can get a better rate at the bank, and that means your mortgage on a house is cheaper. Your monthly payments are cheaper. Now, one thing to consider here, and I've mentioned this before, but it's often very confusing for people. Bank of Canada rate, that only affects the variable rates of the bank. If you're going to get a fixed rate, a 5-year fixed rate has been the more popular thing for people. That's not affected by that Bank of Canada rate. It's actually affected by the bond market. And that's where we're seeing it lower, but the rates haven't quite dropped down there yet. So that's going to be a really big factor, in my opinion, this year. So if those rates actually start getting cut throughout the year, you're going to see affordability coming back. And there will be some buyers that say, okay, I'm ready to come back in. I can now afford that monthly payment. And when you get more buyers, of course, they're going to try and get more houses. The next point to keep in mind is mortgage renewals. So we talked about interest rates, and I mentioned fixed rate and how many people took a 5-year fixed rate mortgage. What that means is they have a term of 5 years, and then at the end of the 5 years, they have to go back to the bank and renew their mortgage. And when they renew, it's going to be at whatever rates are available at that time. Well, we're at the point where people that in 2019 got their mortgage, they're this year having to renew, they would have had a mortgage back then at probably 2.5%. And they're going to go into a bank now, and as of today, they're looking at 5.5%. Well, we're not sure what it's going to be this year, and that's why those interest rates have such a big impact. But those people going in, on the surface, if you look at it, are going to show up. They're going to say, here's how much I have left on my mortgage. What rate can I get? And with that higher rate, their monthly payments are going to go up. And many people are thinking, once again, predicting that they're not going to be able to afford that monthly payment. And thus their only option is going to be to sell their home and get out of it and just start renting. And by doing that and having so many people doing that, the market's going to be flooded with houses. And when there's a ton of supply, well, everything gets cheaper. Well, that's on the surface. What we're actually seeing happen right now with some of those that are going in is that the bank doesn't want the situation where they have to take over a house. That's not ideal. They'd rather the person continue being able to pay. So what they're doing is they're saying, well, you had 25 years on your amortization. You've now paid off 5 years. You're down to 20 years. Well, the rates have gone up. Your monthly payments are more expensive. But to make it cheaper, we will now extend it back to 25 years. Yes, you'll pay more interest in the long term, but your monthly payments are coming down. You get to stay in your house. Everyone's happy. That's what they're trying to do with many people. There will be some that won't work. Their rates will go up and it'll just be unaffordable. But there are many where they're making that work. So that might not have as much of an impact. There may not have as many houses coming on the market. Once again, we're not sure. So we're now saying interest rates are the first thing that are going to affect it. The mortgage renewals may be that second factor. And the final factor in my mind going forward is inventory. That has been the story here. We talked about the months of inventory and how it's gone down the last month. And that just means that there isn't enough inventory to supply all the buyers that are coming into the market. So this is kind of a little bit of a balancing act. If you have a whole bunch of buyers coming back into the market and nobody lists their house for sale, well, now you have a lot of people fighting for a few houses. But if interest rates don't change a ton and not as many buyers jump back in and we still maintain or try and get a few more listings, that could be a little bit balanced. And that, in my opinion, would be great. So another factor, aside from the resales being put on the market, we can't really know what's going to happen. Obviously, people have a home. Will they list it on the market? You have different factors involved, like those that are retiring and wanting to downsize out of those single family homes. Will that increase over time? Will that just be delayed for a couple of years? We don't know. But we do know that if more houses get on the market, that's better for buyers. If less houses are put on the market, but people are wanting to buy, that's better for sellers. And we're kind of at that, like I said, that balancing point. The other aspect in Canada that you've probably heard on the news is new build construction. We have been in desperate need for this. And unfortunately, this year, because of those interest rates, once again, extremely important, even for builders, it becomes more expensive to build a house. And so they need to be incentivized. And I'm not sure about every area in Canada, but I can speak for my area that a lot of the builders have been pausing those new builds because, first of all, not as many buyers. So why would I build a house if I don't have as many people to buy it? But also the cost of building materials because of inflation has not gone down. It's continued to go up. And so the overall cost for them to build the house is high, yet people aren't wanting to pay a high price. So once again, they're not going to do it unless they can make money. And so they look at that, they're pausing. They are also wondering what's going to happen next in the market. The issue here is, and this happened a few years ago, there's not enough supply of these new builds. And suddenly when everyone shows up, because interest rates start falling and say, I'm ready to buy, a house does not just appear. It has to be built. It takes time. And because they've paused all this, and I'm seeing it around me, I'm looking at new build neighborhoods where they have developed the properties, they've got streets in there, they've got everything set. No houses going in. So the plans are there, they are ready to jump on it, but it needs to make sense. And those interest rates and buyers are a huge factor with that. So once again, I'm not positive what's going to happen there, but I know that we are very much on the cusp of something, one way or another. They're either going to stop and they're not going to be building anything, or they're going to see a surge of demand come into play, and then they're going to be playing catch up again, which we saw before. And while nobody wants that type of market, balance is really what you're looking for. It's hard to maintain a balance when we go to such extremes, as in stop building all houses. And so there are a number of factors there. So what does it all mean? We've looked at all the stats, we've looked at the important factors and what will affect the market going forward, but nobody has a crystal ball. So we don't really know what's going to happen. And so if you do have a prediction, feel free, write it down below in the comments and then check back in a year in January of 2025 and find out if you're right or not. It's a fun little exercise, but ultimately we can go online. I can find news articles from credible sources that will say the complete opposite. And oftentimes they go to the extremes, and the end result, usually it's somewhere in the middle. That's generally what happens. And so if you want to look forward and you're trying to figure out what to actually do based on the information, well, look at what you know today, the facts of today. You can use some of the data that we just looked at going back, but basing your decision on your predictions of the future, usually not a great idea. If you want to continue this discussion, like I said, my name is Jeremy Tremblay. I'd love to chat some more, especially if you're looking to buy or sell in the Belleville and surrounding areas. That's my area. That's where I specialize. This is what I know. This is what these stats are based on. This is not Canada-wide. So once again, it's good hearing from you. Till next time.